In a culture saturated with digital metrics, there is constant pressure to be significant immediately. We are surrounded by stories of sudden, overnight success. Investors often reach the 1 or 2 crore milestone and then plateau. They frequently pivot to a new strategy every time a different asset class goes viral, which resets their compounding clock before it has a chance to accelerate. The families managing portfolios of 5,000 crores or more operate with a different objective. They are not looking for a sudden jump in their net worth. Their primary anxiety is psychological inheritance. They worry about passing down the grit and discipline required to build wealth to children who were born into it. The barrier between moderate wealth and a financial empire is rarely a lack of opportunity. It is a misunderstanding of the slow, deliberate framework required to scale. Elite wealth managers operate on a specific paradox. The most effective way to reach exponential results is through incremental steps. Consider Michael Phelps. He secured more Olympic medals than any other athlete by practicing every single day for 7 years. He didn't rely on a rest day or a recovery day. He simply performed the same repetitive strokes slightly better than the day before. This same discipline dictates how a 1,000 crore portfolio is structured compared to a 1 crore portfolio. At 1 crore, safety is a percentage. You might keep 50% in liquid assets to cover immediate needs like home loans or education costs. This diagram shows the shift at the 1,000 crore level. Safety is no longer a percentage, it's a fixed amount, perhaps 50 or 100 crores. Once that bucket is full, the remaining 900 crores is freed up entirely for long-term compounding. The ultra-rich don't necessarily take higher risks. They simply ensure their capital is structured to survive the long timeline required for compounding to do the work. This discipline is applied differently depending on whether a family is managing old or new money. Old money typically prioritizes preservation. They rely on hard assets, family-led control, and businesses that are profitable from the first day of operation. New money is often more willing to tolerate initial losses. They fund platforms like this delivery service, relying on professional management to capture a massive market share before focusing on the bottom line. Traditional investors often reject this model because their strategy is rooted in immediate cash flow. They find it difficult to justify a business that doesn't show a profit on day one. Despite these different styles, both groups succeed through the same engine: relentless, disciplined market capture over several decades. This incremental mindset also explains the current trajectory of the Indian economy. Every national economy evolves through 3 stages. Stage 1 is building hard assets like roads. Stage 2 involves financial services and mass consumption. Stage 3 is pure technological invention. India is currently transitioning from Stage 1 to Stage 2. We are not yet at Stage 3, the phase of pure invention seen at the Google headquarters, where growth is driven by entirely new categories of technology. Looking for the next global tech giant often blinds investors to the wealth being generated right now by basic infrastructure and services. The data shows this transition is already underway. The number of Indians with over 1 crore in mutual funds has reached 400,000. This new class of investors is shifting capital into the real economy, purchasing more homes, using more data, and increasing demand for basic goods. This is why massive value is being created in everyday sectors. Scaling consumer goods, like these snacks, to meet the needs of a growing middle class generates billions in value without requiring a technological breakthrough. This demand is also spreading geographically. India is moving from 10 major hubs to 40 or 50 megacities, as historically overlooked locations like Bhopal become new centers for national growth. A $30 trillion GDP is a mathematical outcome, a 12% annual growth rate maintained for 20 years. Reaching it isn't about finding a single miracle, but about these core sectors expanding every day as the country completes its move into Stage 2.